Dear viewers, welcome to our channel GVS Bank Academy. Today I am going to discuss about CAIB Bank Financial Management for cash reserve ratio and statutory liquidity ratio calculation and detail how we are going to calculate these net demand and time liabilities calculation. This 5 marks case study they had given, September also they had given, and December 2021 also this question they are asking frequently, this NDTL, net demand and time liabilities calculation for CRR and SLR. Now the batch progress, our Bank of Baroda special batch for scale 4 to 5 objective and descriptive, and scale 5 to 6 objective descriptive batch is going on. We are also planning to start a special batch for 3 to 4 and 4 to 5 IIBF special. We are planning to start the JAIIB and CAIB May-June 2022 batch from March 2022. Interested members are requested to contact. Liabilities not to be included for NDTL calculation. Liabilities from the bank balance sheet liabilities schedule number 1 to 5. Bank balance sheet liabilities schedule 1 to 5 not to be included for NDTL calculation. For purpose of NDTL, net demand and time liabilities calculation, what? Liabilities mentioned below shall not form part of liabilities of a bank for the purpose of CRR and SLR. The following liabilities not form part of liabilities for CRR SLR means for the calculation of CRR and SLR, the following points are not going to be included in the demand and time liabilities, that is not form part of. What are there? Point number 1, this is RBI notification dated 20th July 2021, updated circular. Point number 1, paid up capital of the bank, schedule number 1, reserves, schedule number 2, bank balance sheet liability, schedule number 2, borrowings through instruments qualifying for tier 1 and additional tier 1 capital. So what is there? Borrowings through instruments qualifying for banks tier 1 capital and additional tier 1 capital instruments. It means tier 1 capital instruments, additional tier 1 capital instruments are not form of part of liabilities for CRR and SLR. So bank need not maintain CRR and SLR on tier 1 capital and additional tier 1 capital. Any credit balance in the bank P&L of the account. Credit balances in P&L also not form part. Amount of any loan, please see, amount of any loan, refinance, amount of any loan or refinance taken from RBI. Amount of any loan or refinance taken from RBI or Exim Bank or National Housing Bank or NABARD and SIDBI. Any loan or refinance. These two words are very, very important. Any loan or refinance from RBI, Exim Bank, NABARD, NHB and SIDBI. Now, in the examination, they are asking one more question. From banks, where they will get refinance? From what organization they are getting refinance? That question also they are. These are the RBI, Exim Bank for export related, NHB for housing related, agriculture from NABARD, SIDBI, MSME related advances we are getting refinance. So whatever the refinance or loans from these organizations, not form of liabilities. That is the point number 1. Very, very important. Point number 2, net income tax provision made and parked in nominal accounts. Net income tax provision made and parked outstanding amount in nominal account, that also not form of liabilities. Number 3, amount received from DICGT, Deposit Insurance Credit Guarantee Corporation, towards claims payment to the deposited holder held by the bank for pending adjustments. Means bank received the claims from DICC. Ultimately, it has to be pending for adjustment toward the account holders. That also not form of liability. This is not the actual liability to this. Amount received from ECGC, Export Credit Guarantee Corporation, by invoking the guarantee in export related advances. In the export related, where credit guarantee is there from ECGC, after invocation, we are getting the claim amount. That amount lying with the nominal accounts of current account, that also not part of liabilities. Amount received from insurance company on ad hoc settlement of claims pending. So any amount of claims pending, claims received from insurance on ad hoc basis, which was not finally adjusted in the borrower account, that also not form of liabilities. Amount received from the court receiver. Any court appointed receiver remitted the amount, that amount also received from not liability, not form of liability. Liabilities arising on account of utilization of limits under bankers acceptance facility. Sometimes bankers are extending bankers acceptance facility to top rated mutual funds and customers. Bankers co-acceptance. Bankers are co-accepting the facility on behalf of sometimes mutual fund and top rated corporates, customers. So out of the bankers acceptance facility limit, the utilization, how much the amount they had withdrawn, utilized, that amount also, that is not form part of liabilities. Liabilities arising on account of utilization of limits under bankers acceptance facility, new word. Bankers acceptance facility means sometimes we are extending this facility to mutual funds for their liquidity obligations. So that also not part. This is also not part for liabilities for CRR and SLR classification. District DRDA subsidy received on account of self-help groups borrowing accounts. Subsidy. Subsidy amount you need not maintain CRR, SLR. Subsidy released from NABARD under investment subsidy scheme for construction of renovation and expansion of rural. So subsidy received from DRDA or subsidy received from NABARD or subsidy received from central government, state government and kept in 0% fixed deposits on behalf of the customer. So that is. So subsidy received from DRDA, subsidy received from NABARD, subsidy received from state government, central government are also not form part of liabilities for CRR and SLR. Net unrealized gain, 11 point. Net unrealized gain, losses arising from derivative transaction under trading portfolio. Normally derivative transactions means held for trading portfolio. Trading portfolio means held for trading. In the investment classification, derivatives are going to be parked in normally held for trading portfolio. Under held for trading portfolio, if you are parking, that MTM gains, MTM losses or gains, continuous basis you have to calculate. And the gains or losses which are booked by the bank but not realized, net unrealized means not recovered from the party. Derivative losses or gains not recovered from the unrealized means not recovered from the party. Net unrealized gain from the derivative transaction on behalf of the customer or net unrealized loss on behalf of the customer which was unrealized, that amount also we cannot take into consideration of part of liabilities for CRR and SLR. Very, very important this word. Income flows received in advance such as annual fee. For example, locker rent is there. Annual fee in advance we are recovering. Income flows, income received in advance we are receiving from annual inflows, locker rent, other charges, bank guarantee commission, LC commission, in advance we are recovering. And that amount we are parking in nominal account, current account. That is also not actual liability to the bank, which are not refundable. This we cannot refund. So that is also not part of liabilities. Best example is locker rent and bank guarantee commission, letter of credit LC commission. These best examples which you are recovering in advance from the party and parking in nominal account. Bills rediscounted by bank. So first bank is going to discount the bills under bills discounting facility of the customer. After that, sometimes the bank is having some liquidity issues. They can go for rediscount with RBI bills rediscounting. Customer bills is going to be discounted by bank first. After that, any liquidity issues are there. These bills again, discounted bills are again, they are going to rediscount with eligible financial institutions. Normally RBI, as approved by RBI. So normally bills at the time of bills rediscounting with RBI, banks are paying bank rate. Bills rediscounted by banks with RBI at what rate? That is bank rate. Present bank rate is 4.25. So bills rediscounted by bank with eligible fine also not form part of CRR and SLR. So 1 to 13 points, items are not form of liabilities in banks CRR and SLR. These not form of part of liabilities for CRR and SLR purpose. Almost each and every exam they are asking this question, calculation of CRR and N. Without knowing these information, I think candidates cannot get the good marks. So this is the, for the 13 points, these 13 points items are not part of CRR and SLR. Means you need not maintain CLR, SLR on this 13 items that is there. Then liabilities are exempted. This question recent examination they are given. What are the exempted items for maintenance of CRR only? This is only for CRR, cash reserve ratio. Scheduled banks are exempted. Exempted means on the following items they need not to take into consideration of CRR purpose. Scheduled banks are exempted from maintaining CRR on the following liabilities. Exempted. What are their? Credit balance in Asian Clearing Union in dollar accounts. Credit balance in ACU dollar, Asian Clearing Union dollar accounts. Whatever the balance is there, on that balances they are exempted for CRR, cash reserve ratio. Number 1. Number 2, demand and time liabilities in respect of their offshore banking units. Any Indian bank having branches in offshore banking units means Malaysia, Singapore, Philippines, where offshore banking units are there. Any Indian bank unit is having branches in offshore banking units. Their demand and time liabilities are exempted from CRR purpose. Exempted from CRR purpose. Third point, minimum of eligible credit and outstanding loan bonds, outstanding long-term bonds issued by banks to finance infrastructure loans and affordable housing. For financing infrastructure loans and affordable housing loans, any bank has issued long-term bonds more than 7 years. Long-term means outstanding long-term bonds for more than 7 years issued there. That amount also, that long-term bonds issued for to finance infrastructure loans and affordable, that amount also exempted for maintenance of CR. On these liabilities, banks are exempted for maintenance of CR. Third point. Fourth point, liabilities in respect of the bank's international financial center banking units. Example, in India, international financial center is there, Gujarat, Gandhinagar. Any scheduled bank is having a branch in IFSC center, Gujarat, Gandhinagar. Whatever the liabilities in that IFSC center is there, that liabilities are exempted for CRR purpose. International Financial Service Center. Where it is situated? Gujarat, Gandhinagar. Fourth. Fifth, funds borrowed under market repo. Funds borrowed from market repo means other banks. Market repo means borrowing from other banks against Government of India securities. Now where repo means borrowing from RBI, market repo means borrowing from other banks against Government of India security. It means any bank is borrowing from other banks under market repo with Government of India securities, that is exempted from this. Here you have to know market repo means borrowing from other banks against other eligible institutions against Government of India securities. Repo borrowing means only with RBI. Market repo means other eligible banks, eligible organizations exempted. Sixth point, incentivizing. Sixth point, incentivizing bank credit to specific sectors. In 2020, RBI had given one circular for incentivizing the bank rate to specific sectors. Whatever the loans bank is giving for specific sectors for a specified period for exemption from CRR maintenance. Now, credit disbursed as retail loans to auto sector, credit disbursement to retail loans to auto, residential housing and loan to MSME sector. Loans to these three sectors, the period is from 31st January 20 to 31st July 2020. The sanction period is 31st January 2020 to 31st July 2020. Loans sanctioned by banks to auto, housing and MSME. Whatever the loans sanctioned during this period, these three sectors, auto, residential and housing, MSME, these entire sanction advances are going to be deducted straight away from net demand and time liabilities of the bank for CRR calculation. Whatever the loan sanction 31/1/22, 31/7/26 months, auto, housing, MSME loans sanction. These loans sanctioned amount, disbursed amount, straight away deducted from NDTL calculation. So what is the benefit to the bank? To that extent, they need not maintain CRR. And after sanction, during this period after sanction, the outstanding amount up to 5 years also, the amount is going to be progressively deducted from NDTL for CRR calculation. This is a very good step by RBI. 6. 7. Credit disbursed to new MSME borrower. Credit loan disbursed to new MSME borrower. Who is a new MSME borrower? As on 1st January 2021. 1st January 2021, the MSME borrower customer is not having any loan facility from the banking sector. That MSME customer is termed as new MSME borrower. As on 1st January 2021, not having any loan facility from the banking sector by MSME customer, new MS, will be allowed to deduct from their net demand and time liabilities for calculation of cash reserve ratio. So whatever the loans sanctioned to new MSME borrowers from 1st January 2021 to 31st December 2021, new loans sanctioned to MSME borrowers from 1st January 2021 to 31st December 2021, loan up to 25 lakhs. Loan up to 25 lakhs. Sanction period is 1st January 21 to 31st December 2021. For a period from the days of sanction, for a period of 1 year from the date of the sanction, that can be deducted from the NDTL. So what is the benefit to the bank? Whatever the loan sanction up to 25 lakhs from 1st January 2021 to 31st December 2021, the amount is going to be directly deducted from NDTL. To that extent, the bank's CRR is coming down to that effect. And sanctioning period is 1st January 2021 to 31st December 2021, and outstanding up to 1 year. From the date of sanction up to 1 year, outstanding amount also deducted from this. What is this? This is exempted. Last examination they had given 5 marks. What are the exempted items? This, without knowing this, we cannot answer. This is about the two things we are discussing today, very important for coming examination. Thank you very much, viewers, for extending support for our YouTube channel. Shortly, we are going to plan commencing the JAIIB, CAIB, May-June examinations from March 1st week onwards. Thank you very much for all for extending support to our channel. Thank you very much.